The Btec Tech Award and Enterprise. We're looking at component 3, specifically at business documents. And now we're going to look at the invoice. The purpose, an invoice, pretty straightforward, to request payment for goods supplied. The business has given you some goods. They want their money for them. It seems perfectly reasonable. So this is really an important document. If the invoice, it must be done accurately. If it's not done accurately, then it can result in people being asked for too much money or not enough money, and it can get complicated. We need to get the money back if we paid too much. It can take time. It can stop the cash flow of the business. 100% accuracy on an invoice, really, really important. So this is what an invoice looks like. It actually looks pretty much like some of the other documents, so be careful when you're looking at them. The first thing that we need to look at is it's going to have the word invoice on the top, so you can guess that it's an invoice we are asking for payment, written at the top up here. Then, always, as with all documents, has to have the date that the invoice has been sent on, so we can always look it back and refer to it. Each invoice will be given its own unique number. So when I'm a customer and I'm phoning up to find out about an invoice, I'll say, oh, could I talk about invoice 345? And it's really easy for someone to go and look it up. If it didn't have its own unique number, we'd be saying, oh, it's the invoice about this. It's a really easy way of keeping things in order. We have the name and address of the business who want payment for, so you know where to send the check to. We may include their bank details as well, so we know how to pay them. You need to put the reference of the purchase order about what you're asking payment for, so the company understand what the invoice is for, rather than going looking through all the description and then trying to find it. They go, oh yes, they're asking for payment for that purchase order, and they want to know the date that they need to pay it by, the last day that they need to pay it for. Now, when we're dealing with businesses ordering from other businesses, business to business, it's normal to give people 30 days or to the end of the month. So when you look at the date due, it's usually the date at the end of the month. So we looked at the 28th of the 2nd, 19, that was the end of the month. It will also show the list of things which have been delivered and now require payment. So we can double check the purchase order and we can double check the item descriptions. We can have a look at our goods received note or our delivery notes, and we can say we've had these things, that is fine. So we might double check it before we paid it. A lot of double checking goes on. And then finally, the maths must be calculated accurately. So even if you've got the right goods and you've made errors in your totaling or your discounts or your VAT, that means that could lead to under or over a payment again. And as I've said before, this can lead to inaccuracies, which cause a lot of problems for the businesses when we get onto our financial records. That is an invoice.